April 4th, 2025. This is the review for April 4th. I'm doing it on April 5th. I did not do any drawings today. Something to keep in mind, by the way, when we're down 6.1%, if the market goes down 7%, then it hits one of the circuit breakers. I think they're 7%, 12%, and 20%. Happened in 2020 a couple of times when the market hits a 7% loss or profit, or sorry, loss or gain on the day, then they will halt the market for 15 minutes. So had we, let's say, just from the close of 63, let's say we just sold straight off the 7%, which was somewhere down here, the market would have just stopped and it would have gone sideways with just 0 bars for 15 minutes because they will halt the market. So I don't know how the volatility is going to be. It's obviously extremely volatile bars. This bar 19 is a 60-point bar, but something to just keep in the back of your head is if you're in a trade and let's say the market's up 6.7%, probably just get out of the trade, because if you get a vacuum test of 7% or up or down, then the market will be halted for 15 minutes. And when it gets halted, there can be gaps and it can just be problematic for day traders. So in the future, just something to keep in mind. If you do end up seeing us up or down close to 7%, probably better not to enter a trade and just to wait patiently. Also, the 3-bar micro channel Discord is now open. It's if you join the channel, it's in the members area if you want to be a part of it. Up to you. Anyways, for the day, we had a big gap down. I know, it might not look huge, but it is. It was a, 2.5% gap down, a really large gap, and kind of the same problem as yesterday. If you look at bar 1, if you're getting a 2 or a 3 or a 4, some really, really large gap, for the bears, you want to see the bulls reject the gap. You want one to be a giant bull bar closing up near its high if this is going to be any sort of bull day. The bulls getting a doji bar on bar 1 tells me that they're accepting the gap, and they're accepting that we're probably going at least a little bit lower, and they're accepting that we're probably going to get a couple legs sideways to down. So it's not surprising that we get 2 and 3. And after 2 and 3, you know that this is probably not a bull trend day, because if it was going to be a bull trend day, we probably would have rallied immediately from the open and just tried to close the gap. We would have gotten a really strong bull bar on 1. 4 and 5, large tails on the top. Nothing that clear that needs a second leg yet. I think 2 and 3 probably needs another leg. An outside bar on bar 6, you could argue 4-5 is a leg up, and then an outside up bar on 6 is a second leg up, so you could say second leg trap. 7, 8, 9 starts with an inside bar, which can be a little bit more prone to failure, but a strong micro channel with a micro gap, so you can sell the close of 9. I did sell the close of 9. My trades today, I sold the close of 9. I got out above 17. I sold the close of 26. I sold more on 27, and I sold more on 28. I got out of that in here, and I sold the close of 36, and I got out above 40s. Sorry, I sold the close of 36, and I sold more during 38, and I got out above 48, and then I sold the close of 58, and I got out above 64. So basically just traded the bear channel all the way down today. So reasonable to sell. Not 10, not a very good reversal. You can sell above 10. It's a 3-bar micro channel. You can sell the close of 9, or you can sell above 10. Basically just betting that 7, 8, 9 gets another leg down. We have a second leg down, 11, 12, 13. A pause on 14. So 1, pullback, 2, pullback, and then a third leg down, 15, 16. It's breaking below the bear channel, which is generally a low probability breakout. So odds are there's going to be some sort of failure. And when it does fail, it tries to test the other side of the channel. Obviously, the channel ended up being larger than you can see in this at this point in the day, but we do end up getting a channel. Bulls can exit above 17, or bears can exit above 17. Do you buy above 17? It's probably a minor reversal, but it should get a second leg up. It is an outside bar, though, which is a trading range bar. So you have to keep in mind, however good the reversal is, odds are that we probably go a little bit more sideways to down and get back to the 17 high, since it's a trading range bar. This is also a really tight channel down, 7 through 16. And also 17, 18, and 19 does not have a micro gap. There's no gap between the 17 high and the 19 low. So with no micro gap and the fact that it's against a tight channel, and 19 is closing basically at the moving average, this is actually not as strong of a micro channel as it looks. No micro gap and approaching the moving average against a tight channel. Those are the 3 big red flags for micro channels, in my mind at least. Something I've been looking at when the market creates a micro gap with the first bar. So there's a difference, right? If bar 3 creates a micro gap, it creates it with the low of the first bar and the high of the third bar. If it's creating it in the on the third bar if it's creating it. So that's that micro gap. This is a bull close, 55. You can see it's a bull close. So if the first bar creates a micro gap, it's different. So I don't know which one is stronger. I'm going to be looking into it. I believe that the first micro gap is probably stronger because look at go look at all the times where it's a leg one and the first leg creates a micro gap. You can see we had it happen. The 30 bar 33, 34, 35, 36 creates a micro gap. We get back to the 33 low over here. There's sellers. Key that we had 3 legs up, 1, pull back 2, pull back 3, pull back 4 legs up. So I think whenever you have 3 or 4 legs up, approaching a spot where the first bar creates a micro gap, there's probably going to be some sort of resistance. I would imagine there would be resistance at the bar 23 low whenever it is that we end up getting there. You can see here, this low, we sold off, and then we rallied all the way back up to essentially the 55 low, and then we sold off again. So I thought that, I have to look into that, but I think there's something there. Anyways, so 19, not as good as it might look because it basically has all of the big problems with a micro channel, 3-bar micro channel. We get 3 legs up, so 21 is leg 2 and 23 is leg 3. And then a reversal down 24. Big enough bar on 24. I think we're back to always in short. Some traders sell to close 24, 25, 26, expecting at least another leg down. 27 and 28, a minor reversal, most likely a pullback. The channel up from 17 to 23 is pretty strong. Yeah, it's a tight channel. It's not a buy the close channel. I just mentioned all the issues with it, but it's still enough to make me hesitate in calling this a bear trend day. So we might go a little bit more sideways. 27, 28, like I said, should get some sort of second leg, and you could argue we got it. 31, 32, 33. 29 and 30, I think makes it clear that we're going lower. Odds are that's going to get another leg down. You can say it's leg 2, and we should get a third leg down. We also should get at least one tick below the bar 27 low. Odds are we're getting, 26 low. Odds are we're getting one tick below the 26 low. 34, 35, 36, 3 straight bear bars. It's possibly leg 3. That's the issue. I did, like I said, sell more down here, but I was a little bit cautious because it could be 3 legs down. However, on some time frame, 17 is a bear bar closing near its low, right at this low. So I thought it was likely that we would have to get below the 17 low to let the traders who sold around here get out of the trade. And that's exactly what ended up happening. So we did get a pullback, and then you could argue 3 legs down in the third leg. However you want to divide it, we had obviously, it's a trend, right? So you're going to count a bunch of legs, but 3 big legs down, 2, 3, maybe 4. 38 might need a second leg. It's a big enough bar, but 43 is probably your second leg if 38 needed a second leg. So that's the thing, is you have to judge how strong it is. And 38 is not very good against 34 through 37. This 4-bar micro channel is definitely very likely going to get a little bit more to the downside. Had 38 gotten follow through, I would have been pretty quick to get out because we do have 3 legs down for the bears there. 20, so 1, pull back 2, pull back 3, 26, 30, 37. But again, I still thought we would probably get below the 17th low. 44, 45, 46, a very late breakout below the bar 17 low and a very late leg. So not really that great of a breakout. You're breaking out below the low of the day. So the bears are trying to get a count reset, and they're hoping that 46 is going to close basically like 45. They want consecutive strong bear bars closing near their low. Instead, you get basically a doji bar on 46, which is pretty disappointing. Traders might exit at the market, or they exit above 47, as I mentioned that I did. Some other traders might wait for 49 to touch the 46 high. Outside up bar, you can see bears pretty clearly disappointed in buying back shorts, accepting the trading range. And then we get 3 legs up, 56, a bear bar closing near its low, sell to close all the way down. Obviously difficult to sell, 60, 61, 62, 63. If you are, it should get a second leg, but you might sit through a deep pullback. I exited above 64. I would exit above 64. But, traders know that 56 through 63 is going to get a deep pullback, but it should get a second leg. So some traders, they'll sell all the bull closes and bear closes all the way up. Algorithms continuously scale in, knowing we should get back to this area, which we do at the end of the day. But 64 was big enough for a second leg up. The weekly chart, for me, that's the biggest bar I have ever seen in my trading career. I looked at the monthly chart would also, this was bigger, I suppose, 957, 673. So if we keep going down, it won't be as big as this, or be as big as this. But the weekly chart, that was the largest weekly chart bar. I don't know. You can fact check me on this, please do. It might be in the history of the stock market because, I mean, percentage wise, probably not, but point wise, it's got to be, right? If you look, nothing over here is going to surpass it. Maybe something in 2007 beat it point wise or percentage wise. This is a pretty large bar, 48, but this is 62. Now, obviously, I say it's the largest bar ever, but the stock market is also as high as it's ever been, right? So 10% of 600 is 60, 10% of 275 is 27. So this may have actually been large, 50-point thing on 300 is almost 20%. This is not quite as much, but it's still a really large bar and closing on its low. Like I said, this is one of the strongest bear bars I have ever seen in my life on the weekly chart. I've mentioned when we were over here and as we've been rallying, I thought we would go back to 5,000. I obviously did not expect anything like this to happen. I thought we would sell off down there, but I also thought we would find pretty clear support at 5,000 and start to go sideways. This is a really, really big bar. So next week is important. Will the bears get more follow through or will the bulls get a large rejection? My guess, there will be some sort of relief, but this is one leg down, pull back, 2 legs down, probably pull back, and then maybe a 3rd leg down. But regardless, this channel down is extremely tight. The daily chart, Al has mentioned this pattern before. Whenever you get a bull bar closing near its high, he mentions it the other way, where it's a bear bar closing near its low, and then like this, or some sort of bear bar and then a bull bar, and it creates an open gap with the high of one and the low of the other. Can increase the odds of a swing trade. Here we have an open gap, and that increases the odds of a swing trade. On the daily chart, I had extended hours on. Oh, this is not futures. There we go. Okay. So on the daily chart, obviously 3-bar micro channel, pretty good one too, right? So this is a really climactic bar. But I know that I could sell the close of this bar and expect to make money, but I would also probably expect to bounce rather soon. So I think we're obviously going to 5,000 and we might bounce off 5,000 and go sideways for a little bit. But again, ultimately we're likely going lower. All right, that's it.